The current crisis and ultimately the Federal Reserve's response essentially verified that despite the intention, these institutions were in fact treated as being special, and in fact most of the early emergency provisions that the Federal Reserve put in place to provide liquidity to financial markets under Section 13.3 of the Federal Reserve Act were actually directed only to the primary dealers to provide them not only low-cost, very low interest rate loans, but also loan them higher quality securities against questionable collateral to enable them to continue their funding activities. So indeed, the market assumption about the specialness of these institutions was in fact verified by behavior. Concerns about the financial crisis resulted in a number of legislative activities, Dodd-Frank in particular, which, among other things, tried to put some constraints on the Federal Reserve's ability to provide that kind of support to individual institutions as opposed to markets as a whole. After thinking about and reflecting on this process and the behavior and the consequences of what we saw, there are really two policy options that essentially present themselves. The Federal Reserve had argued previously that because of its previous surveillance activities that it actually had abandoned, it had good knowledge of what was going on in the Drexel-Burnham case. And so one possibility would be to simply extend and reinstitute regulatory authority and supervisory and monitoring over these institutions, both in order to essentially enhance their ability to understand what's going on in the marketplace. The other alternative, which is in fact one that the committee favors and actually opined upon previously in another statement, 2080, back in December of 2009, and that would be to essentially abandon the whole primary dealer function. It's essentially an outdated activity, and with electronics, there's absolutely no reason why the Federal Reserve has to deal with only a select few institutions in its auction process, but rather it could rely upon any institution, commercial bank or other institutions that met collateral and other soundness criteria, to participate in the auction process. This would eliminate the bottleneck that was exposed in the current financial crisis, where the objective was to transmit liquidity throughout the system as a whole, but if you have only a few institutions who are themselves liquidity constrained, as the primary dealers, many of them were, then in fact the liquidity could not get out through the system in a way to reach the institutions that could deploy it in the most advantageous and efficient manner. And by following a model essentially adopted by the ECB, who deals with over 500 counterparties, there's absolutely no reason why in today's environment the Federal Reserve should not do the same thing, and by eliminating the primary dealer designation would also accomplish its objective of essentially reducing the privileged nature that these select few institutions had.